Hi, this is Mark with your update for the week commencing the 30th of November. I have been trading Forex now for over 6 years, and I have to say the back end of last week was one of the strangest, most horrible times I've had trying to trade. In the end, by late Thursday, I was telling my followers to leave it alone till after the weekend. Now, this is a British pound dollar weekly chart. And last week, if you recall, we were looking at this, and we were looking at the fact that we had what is known as a bearish engulfing candle. And what this suggests is that price is going to move down. And as I say, this is a weekly chart, and if you look, if you ignore all the noise, all the volatility, and everything that went on last week, it worked, because price has gone down. However, were you in the trenches last week, you know that price was going here, 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 here. And what's going on at the moment, I've mentioned before that sentiment has been ruling the market in many ways, because at the end of the day, the world economy is in such a mess that it's been a case of, well, your economy is worse than mine, rather than which is the better economy. What came out last week then was the fundamental news, and particularly the Fed announcement that they were no longer too concerned about dollar weakness. Well, for the early part of this year, every major financial and world leader has been trying to talk the dollar up, because at the end of the day, it's to nobody's benefit if the dollar is on the floor. So logic said that after this Fed announcement, that technical analysis is out the window and the price will go up, because the logic is if the Fed are no longer supporting the dollar, it will go up. We then came to Thanksgiving Thursday. Normally on public holidays things can be quiet. Most of the big traders are away, and Thursday, Friday, being Thanksgiving weekend, you would expect not a great deal of volatility. However, then from out of nowhere comes this news from Dubai, and as with all major news like this that's first released, it was just gossip. Well, it wasn't gossip, it's true. The major company, government-backed company from Dubai, owes about $60 billion and can't pay it, and wants a moratorium to not even pay the interest for the next 6 months. But the rumours that were going around that one of the major high street banks in the United Kingdom was into this lot for $30 billion. And this $30 billion is related to long-term loans, and this particular bank had already been bailed out to the tune of $40 billion last year. So this would impact greatly on the British pound, and hence on Friday I'd said to my followers on Thursday, leave it alone, because what was happening here, it was teasing us. This candle here was on the 6,500 line, which was a previous breakout. And what happens Friday is price absolutely plows down here 200 and odd pips and comes back and finishes exactly where it was. So to me now we are in a situation that I am looking more at the longer term charts. I'm going to leave Monday alone, because this weekend all this news that's come out is being digested by all the analysts, all the experts. The rumour mill will be going even further. There is a strong possibility of big gaps at the market open on Monday morning, and there is a strong possibility, because all the big guys come back, the US traders come back Monday as well, that it could be bloodbath again. And for me, at the end of the day, my main priority is to not lose. Now here on the pound on the daily, you can clearly see that we've had a 5-8 cross. Price broke a daily trend line that went back to beginning of October and closed below, so this would suggest a reversal. But as I say, we then price spiked down and has finished, I think, on some platforms just below and some just above this major psychological and support and resistance level of 6,500. If we go to the weekly, it's actually worked out, as I said to you earlier, it worked out as predicted. This is a reversal candle, and therefore price is going down, and although we've had a week of indecision, that's where price is going. So it may be true. Now, tomorrow night is the close of the monthly candles on lots of pairs. Now the pound one is not really giving us any clues. This is really, no, it's not a clue. But what's going to be interesting is at the market open Tuesday morning, which will be the 1st of December, is look at the Bollinger Bands, because some of the Bollinger Bands on some of these pairs, I think it was the Aussie dollar weekly is starting to look as though it's closing. A lot of these Bollinger Bands to me look as though they might be about to start to close. And if they start to close on the longer term charts, I can't find them now, but for example here on the Swissy, if this one starts to close up and we're in a long term downtrend, that could be the sign the price will go back up again. So they're all clues for the equation. Now last week on the Swissy we had a bullish engulfing candle which suggested that price, after a long move down going back to early in the year, was going to go up. We now have a bearish engulfing candle. So as I say, to me, until things start to become a little clearer and we get this news out of the way, then unless you're trading off weekly or monthly charts, I would strongly recommend you leave it alone for a few days. Now, other things that went on last week on a technical nature, we'd been looking for weeks on the British pound for a triangle breakout. And I mentioned that a triangle breakout, it's in the video in Forex Strategy section. The theory is that the size of the triangle will be replicated in the size of the movement. So that triangle space there is 1600 pips. This is a 5-digit Alpari platform, so it's 1605, shall we say. So from the point of the break of the triangle, we are expecting a move of 1600 pips, which will take us down here into the region of 134 on the pound yen. And we have so far had a 1000 pip move here. Now we were predicting this back all the way back up here a fortnight ago. So there are technical things that are going on, but it is so dramatic at the moment that I really think we should wait until the fundamentals just get out of the way and it settles down. There's no need to get disheartened with all of this, because if we go back to the pound, this is the pound on the monthly chart I was showing you before. Let's look on this on a weekly. Last year, this particular pair, and this is not just the pound, loads and loads of the pairs last year had this similar thing. But this was the crisis. This started in late July, and price came down here 6,500 pips. It then, and Christmas last year was a decent month for a change. Sometimes Christmas can be difficult. Last year was it was a lot easier, and there was good money to be made. From here, and one of these trades I think started on New Year's Eve, you then had a 3,000 pip move up. But what you can see at the moment, what we've had recently, is this going sideways. Now again, as I say, on the pound, this looks to be a bearish engulfing candle movement, and this looks to be a movement down. And hopefully we can have a situation now where we can move 2,000-3,000 pips down here to the recent low. Now the New Zealand dollar is very interesting. This is what's known as a shooting star formation on the monthly, and this will close tomorrow, and this would suggest that the New Zealand dollar is due a big fall. And if we were to look at the New Zealand dollar on the daily, then on the daily we were looking last week here. Price broke through a major daily trend line that has held since February of this year. This is hugely significant. And what it also broke, this blue line here that you can see, is the 55 EMA. And although it's been spiked occasionally recently, this had not broken since April time. So on Thursday, price broke through, closed below, and we're moving down. The Bollinger Band has opened, and the Bollinger Band on the weekly is way down here. Now this is one of the ones I've been looking at just to see what's going on here. But if we go back to this longer term chart, I have put a line in here as to where I think this move may finish, and the reasons are, and I think it's actually a little bit lower, so we may have to move this. On the weekly chart, we have the 200 EMA here at the 6700 area. On the daily chart, we have the 200 EMA in a similar area, and on the monthly, we have the 34 and the 55. So there is a possibility this New Zealand dollar is going to fall 300-400 pips down to 6700 and then bounce back up again. So there are potential trades out. What I'm going to do is do a far more detailed analysis tomorrow. It's the first time I've done this in over a year, but I strongly suggest you leave it. Leave it today, for Monday, and I will do another one of these videos in more detail for Tuesday. Be careful. This is huge, huge world news and very scary. Catch you later.